Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Friday, November the 11th, 911. The year's 2020. Let's talk trading. The weekly wrap up. As you all know, these videos are for educational purposes only. And the disclaimer is right there on the screen. Risk management. Do not lose more on any particular trade than you're willing to lose. Get your brain management in order, and also your money management. So I've got Walmal on the line. Walmal, how do you like that weekly candle there on the pound dollar?
It's kind of nuts. I mean, on my chart, it's 495 pips. I don't know, not sure what you're showing on yours, but mine has a range of 495 pips. We have months that aren't that big.
Actually, I think mine's like about 502 pips. As far as the
Wow.
gaps, we can see that the pound dollar did not fill that gap down. And we've got a couple other pairs that did not fill the gap. So, once again, the weekly open gap is a very profitable trade, but it's not always a winner. And if we look at the daily chart here, we can see what happened. We put in the range for the week, the opening day, Monday, and then we broke out of that Tuesday. And also on Tuesday, we broke out of the opening range the first day of the year. And we're now 335 pips below that first day of the year range. And I was talking to Walmal earlier, I think it was last week, I was talking about, being short from that upper weekly and monthly rat zone here, the first day of the month, how profitable that would have been.
Yeah, it's one of the things, we know it works, but sometimes we just don't pull the trigger, do we?
Yeah. Or we pull the trigger, but we get out very soon, because you can see here we were above the yearly open for a few days, and then we finally crossed below it at 32.45, and we're 462 pips below the yearly open. So even that trade would have been sweet.
Yep.
And
nice.
And yesterday, we were above the weekly inside bar from 4 weeks ago, and we fell below that. And so it's just a lot of downside on that pound. And for the day, we have a range of 104. You can see all the pound pairs are over 100 in range, and they're all in the red. As far as the buy zone goes, the pivot was right around, let's see. No, the pivot was up here. The future pivot's right now at the open. We missed that pivot. You can see, though, if you took the triggers long, there was definitely some pips to be had. Now we missed that, looks like, just by how many pips? Oh, we can probably put it up on the future chart. We can see what we missed it by. Green rats are feasting again here. You can see on the pivot, we missed the weekly pivot. I'm sorry, the daily pivot. And I believe we missed the weekly pivot too. Yes, we did. And we're almost going to take out the weekly pivot here at 27.02 if price gets down to it. That was a missed pivot. And as far as the dailies, you can see we've got 4 missed pivots this month. Today we missed it by 5 pips. But it still would have been a profitable trade going long in the buy zone. Wick zone in and out on both the top and the bottom. Right now we're sitting inside it. And you can see here on the ranges, we've got a 104 pip range today. Yesterday was 262 at the 99 percentile. And then I guess Tuesday we were at 189, which was at the 95 percentile. A lot of range this week, huh, Walmal?
Oh, yeah, it's been crazy. It's just moving all over the place, and it's just it's a good time for trading. If as long as you're in the right direction, it's a good time for trading. But even like today, you look at today, we only moved 100 pips, but I was able to capture a large number of those pips, because even though it only moved 100 pips, it moved from one end to the other end a couple of times. So you have lots of opportunities.
Right.
Especially since we're not trading structure, we're trading price movement. If you trade price movement, even on a small day, comparatively speaking, you can make lots of pips.
Yeah, and we noticed though, like the last 4 hours, each was over 30 pips.
Yeah, which is and it's funny because you think about if you the last 4 hours I got 33, 32, 47, and 38. So they're not just over 30 pips; they're well over 30 pips. And like I said, we've only moved 103 for the entire day, and yet we've got these big moves that are happening within the hour, which means there's lots of room to make some trades and make some money. It's just that it's crisscrossing back and forth a little bit, and so because of that, you just got to be cautious of that. And if you look even on the hourly chart, you'll see that a lot of these hours have got big, long wicks on them. People say, well, that's a danger zone because you can be running up, and then it can run all the way back against it. Yep, but that's an opportunity where you could go and catch a trade on the way up and catch a trade on the way down and make some pips.
Exactly. And I know we've been trading, or you've been trading, because my head wasn't in the game because I've got some union stuff to deal with in a few minutes. But I think you were trading the 90 line and the 00 line and the 80 line, weren't you?
Yes, and I took multiple trades off that, and now a lot of times I was only getting maybe 2 or 3 pips, and we talked about this earlier. I only got 2 or 3 pips off of it because of the way I saw it moving. But I got several trades today where it was 10 pips or more. So it can happen. It's just that you need to go and sit there and pay attention to what the price is doing. Don't go and take a trade and look away.
Yeah. Did you
take your trade and pay attention to what price is doing?
Yeah, I've got the 5-minute chart up, and 2 candles ago we had the purple 2 ball on the bottom, and then but we opened below the mid dot. I'm just curious, did you take that break to the north anyway?
I did, and the reason why is mine didn't open up below it. Actually, my 5-minute candle actually opened up right on top of it. So because it opened up right on top of it, as soon as I broke the high of the previous candle, I was able to get in there, and on that trade, I picked off 5 pips on that.
Yeah. So in other words, the 3-level ZZ indicator put in this 2 ball at the bottom, and so the high of this candle is the long trigger, and so. And normally we like to see price open above the mid dot here, but he said on his platform it opened right there. On mine it opened below, so the trigger was at the long. That's the way Walmal likes to play it. Usually I'll trigger when it's crossing the mid dot. I'm a little more, I guess you said, aggressive on my entries.
Exactly. I think you're a little bit more aggressive on it. Now, you have a major advantage of doing that, and the major advantage you have is that you get to pick up all those pips from the mid-dot all the way up to the high.
Right.
Now, the disadvantage of that is a lot of times it'll hit that mid-dot or just cross over the mid-dot and turn around and go right back against you.
Right.
And for that reason, I don't like to do that. But, to each his own. The whole thing really comes down to how you're going to manage the money once you're in the trade. How you're going to manage the trade, how you're going to exit out, because that's really all that matters.
Yeah, because see right here now we've just had a second touch of the Walmal line at 90, because we've got the long at 90 and short at 80. But you can see here how prices seems to just be oscillating in these areas. There's been a few breakouts, but not many. And that's why you're taking your pips 1, 2, or 3 at a time, right?
Exactly. Just get your pips and get out, So, we said this earlier this week, stacks and bricks. We're just grab a pip, stack a pip, stack a pip, stack a pip. And somebody had said on one of the forums somewhere, you can't make money that way. Well, yeah, you can. You really can, And I was talking earlier with you where today I took a lot more trades than I normally take in a particular day. In fact,
yeah. How many trades have you taken today?
I took 20 trades. I took over 20 trades today, but but normally I didn't take that many trades for the entire week. But at the same time, most of my trades were 1 or 2 pip trades, and I took 2 losses today. I took a 6 pip loss, and I took a 6.7 loss. But if you take 18 and let's say I averaged out to 2 pips or 3 pips, and you multiply it out, what does it tell you at the end of the day? Are you positive or are you negative? You're positive, and not only are you positive, but you're positive by a big chunk.
Yeah, and that now I'll have to brag on you. That 1 hour, I can't remember if it was the last hour or the one before, but you had taken so many trades. I think you said you made 22 pips out of the 33 pip range.
Yeah, and it was just because what I was doing was that particular hour, what it was doing is it was ranging that 30 pips up and down from one end to the other end. I noticed that pattern. I was watching how price moved, and then what I did was I waited for my signal, and I was very patient and waited for my signal and just kept on running it from one end to the other end. And, and that's what you need to do. That's the whole idea of price movement. Trading with price movement is are you going and jumping in? Is there a signal for you to jump in? And, and then some of the factors that keep you out. Did it already move too much? Did it, does it, for instance, if I'm sitting there with an hour and I've already moved 56 pips and it's now starting to break out of that range, you know what? I'm not going to go and take that trade. To me, that's a high risk trade. But at the same time, if we've moved 56 pips and now I've got a signal to go short, let's say it ran up 56 pips and I got a signal to go short, I'm going to take that trade because that's a trade that's probably worthwhile taking because we know statistically that if you run that many pips up, more than likely you're going to get some type of retracement, even if it's only 1, 2, or 3 pips. Well, that's 1, 2, or 3 pips in your pocket, and that you can take advantage of.
Yeah, speaking of 2 pips in your pocket, if you can see here that the previous candle high was 2.1 pips above that 90. It was at 92.1. So had you gone long at 90, there was an opportunity to take 1 or 2 pips. And some people, yeah.
And that's what you have to do sometimes. Sometimes that's the market that's given to you. Especially, right now we're making this video at about 1:25 Eastern time right now. And so we know, especially on a Friday, well, the market's starting to wind down. And so that's what the market's going to do. It's going to sit there and plateau and just give those 1 or 2 pips. Now, you usually do get on Friday some type of explosion. It'll explode out of this. But the problem is the vast majority, it finds a line and it just oscillates back and forth across it. Well, if you know that's what you got to do and that's the only time you can trade, well, take advantage of what price does at that time. Go and take the 1, 2 pips. I mean, for instance, you could have very easily gone and taken a short that just happened on the 5-minute because it crossed the 90 and it crossed over the mid dot. That would have been a good trade where you could pick up 5 pips right there.
Are you looking at M1?
M5.
Oh, okay.
And it's it's just there's no ball on the top, but we know that there's a top that's gone across this entire hour. It just sat there and just never crossed that 92 line. Well, now it came off the 92 line. Okay, it crossed the 90. It crossed the mid dot. You know what? This is a good probability I can go pick a pip up. And you stay in the trade until it shows you that you can't pick a pip up. And that's what you do. And then you just keep on doing that back and forth.
Yeah, but it's a lot of traders. I guess it's because of what they've been reading all over the net. And it was something you said. The reason why these people say you have to make these 50 pip trades is because they're taking all these 20 and 30 pip losses, so they have to make those up.
No, you don't do that. if you're doing this style of trade, now there's a place for taking a 20 pip loss. If you're taking a 20 pip loss because you're doing some type of structured type trading, if you're doing some type of swing trade, yeah, absolutely, you take 20 pip and 30 pip losses, but that's because you're also looking to make 50, 60, 70, 100 pips. I'm not looking to make 50, 60, 70, 100 pips. I'm looking to make somewhere, remember my old rule of 10, 5, 1. I want to make 10 or 5 or 1.
Yeah.
That's what I'm looking to get. And so because of that, I can go and I need to go and make my stop loss much smaller.
Yeah.
And if I'm in the right direction of a trade, there you go.
Okay, well, fellow traders, once again, the fastest 15 minutes in trading has gone by. I hope everybody has a profitable week, and I hope you stay safe out there this weekend. Here in Oregon, we're experiencing wildfires, so any Oregon traders, make sure you stay safe. And when you come back to your trading platform next week, always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. and click subscribe if you're new. This is the Rumpled One, over and out.